Hey guys, today we are looking at PayPal Inc. ticker symbol PYPL. We're going to be looking at the fundamentals of the company to give a fair value based on discounted free cash flow and the Buffett-Graham intrinsic value. PayPal currently has a share price of $211.91 a share, down from its all-time high of $310. You can see it's been absolutely hammered in these last few months. Got also hammered in earnings as well, but this is pretty much the lowest it's been all year. So is this the opportunity to buy? So we're going to look at these right now. So PayPal, as I said, has a market cap of $250 billion. It has a share price of $211 a share. 52-week low of 183, but that 52-week high and its all-time high of 310. So can it get back up to that? Does not pay a dividend, but let's have a look at the steps. Before that, can you please give a like on the video? Let's try and get to 20 likes because it really helps me out. I want to try and increase that. I'm going to keep on asking for likes, but not too many because I don't want to annoy you guys. But anyway, is the PE ratio less than the market? PayPal has quite a high PE ratio of 51, and that is obviously higher than the market, which is around about 28. So that is a fail. Next, is the revenue increasing? Yes, it is. 15.4 billion to 22.7. So that's good. And is their profit increasing with that revenue? Yes, they're getting a lot more profit out of their revenue. That's almost gone up 2.5 times, 2 billion to 5. Excellent from PayPal. I imagine shares outstanding are increasing, but let's see. No, actually PayPal are buying back their shares. That's incorrect of me. 1.2 billion to 1.173. So that means that they're rewarding shareholders by buying back the shares, and they also think that their company may be a little bit undervalued at the minute, because if they didn't think so, they wouldn't be buying back shares. They'd potentially be issuing new ones. And finally, is that free cash flow increasing? Yes, it is. Not massively, 4.6 billion to 5, but still is a pass. So overall, that is 4 passes. And the free cash flow ratio is 5 billion. So 250 divided by that is around about 49, which is very similar to the PE ratio. And as I said before, it does not pay a dividend. Now we want to have a look at my model. So we've got discounted free cash flow here, and I've calculated the future free cash flows of PayPal, and then this gives us a calculated stock price. So let's have a look at this now. So actually, discounted free cash flow says the stock is pretty well valued at $212 a share, which is right upon where it is. So that is saying that it's at a slight discount at the minute, but it's fairly valued. So the next thing we want to look at is the Buffett-Graham intrinsic value. This takes in earnings per share and growth rate into account, as well as its bond offerings. And there you go. See, fair value of $208, a fair value of $277.33 a share, which is a 30% discount, and a Graham price of 208, which is meaning that the Graham price is, if you see the stock at this price, buy now, and the fair value is what they think the stock is worth. So $208 a share is pretty much where it is right now, and it has a fair value of 277. So if we go back to that, back to the shirt sheet, this was basically its price up on October 20th, which would have been the fair value. So it's easily thinking it can go from 210 to 270 in the short term. If we just compare that to what the analysts are saying, they're in line with what we're saying. They're saying it's a buy, 22 buying, 1 selling, and 4 holding, with an average target price of 279, which is about what we're saying, a low of 190, which is much lower than the discounted free cash flow model, and a high of 342, which if we go back to here as well, that would be below past its all-time high. There has been some resistance at about that 310 mark, but very possible this stock has been an absolute rampage since the pandemic. So both models are saying it's a buy. So what I want to do is just quickly look at some of the technicals here. Let me just add in some moving averages, if I could spell moving correctly. And as before, can you please give it a like and subscribe if you're not already. We're going to be bringing out as many stocks as possible. Trying to do 1 video a day, or apart from on weekends, because not many people are watching YouTube at that time, but you're more interested in the stocks during the week. But I'll be bringing out probably an AbbVie video tomorrow. So give your comments down below if you're interested in that. So firstly, we'll add a 50-day moving average in green. This is the shortest moving average I like to look at to see what the stock's been doing. We've got a 100-day in yellow, and finally we've got a 200-day in the red once I add it. So things that we initially seen here is the stock has broken below all of the major moving averages. The stock hasn't been below the 200-day since the pandemic, which is actually quite crazy to see. So The technicals would say as a sell, as what this is saying here, because we are seeing some death crosses here. The price has broken below all three of the major moving averages, but the fact that the stock hasn't been listed below a 200-day moving average since the pandemic, and if we take it out before there, I mean, October 2019, 2020, it's never had quite a, let's go to the log graph here. Yeah, very similar to what it was in the pandemic. Levels are below the 200 days. So I would say if you know, that looks like a buying opportunity to me just because it's that low. Next, we want to look at the MACD to see what the momentum of the stock is. So let me get that up there. Moving average, convergence, divergence. And you can see here, let's just put it again into the year. It is in a proper negative tailwind, but if you look here, the stock price and the MACD line and the signal line are starting to converge and come back to the positive. So what we're looking for here is them to be to cross again, which it looks like it's doing. So I would say hold out for a couple of days, wait for that cross, then buy, and then you would hold until eventually it crosses back over. So that is looking like a pretty bullish movement as well. And finally, this is actually the good indicator that I wanted to show. This is the relative strength index, and we'll see why almost immediately. Is this stock is in oversold regions, which means if we compare it to previous times when it's been oversold, here it was in oversold and shot up. Here it was in oversold and shot up. It's not been this oversold since, I was going to say the pandemic, but even the pandemic, it was not even this much. Round about here, which was August 19, and then the stock went on a run from $90 to over 120. So RSI is saying it's never been in this level of oversold. Once again here, look at this. This takes back to 2018. It was at $68 a share, then went on a run, another very high run, almost doubled before it was in the overbought regions. So I would say RSI is looking like a buy as well. So the stock has pretty... even though it's in a negative downswing, I think the technicals are still looking good because the stock hasn't been relatively this low in quite some time. And then if we go back to what I was saying before, which is the discount free cash flow and buffer Graham intrinsic value, they're saying the stock is either just about valued or got some potential upside on the buffer Graham intrinsic value. And then once again, if we compare to what the analysts are saying, analysts overall are saying the stock can still go up. So PayPal, one of my favorites. I really like the stock. I wish I bought PayPal stock when I started using it back in 2006. Obviously, the stock only IPO'd in 2016, but I would have wished I could have bought some stock back then because it's been an absolute tear as we've seen. Right guys, thanks for watching the video. As I said, tomorrow I will be doing a video on AbbVie, so please give me a comment if you're interested in that. I've also had some requests for other stocks like Target. Some of you were interested in the Walmart video, but I will be looking at Target as well. So probably Target and AbbVie this week, and then we'll be seeing whatever happens in there. We've got some earnings that I said I would look at as well, post earnings. So right guys, thanks for watching. Please give a like on the video as always, and I will catch you guys next time.